Take all your money, buy Bitcoin.
Wake up every morning and say GM.
GM. Saturday, 31st of August. So we are at the end of the month, or coming into the end of the month. So typically, when you get a monthly close, so the last day of the month, that happens on a weekend, especially a Saturday, those are the lowest volatility days on average. You have very little movement, as people don't like to take bets necessarily into the end of the month. So why? Well, if somebody was betting on August, they will already have closed their position during the week. Okay. You also have the August options expiry, which was on Friday. So anyone who was positioning for just August should have closed out their position. If they're going to continue to hold, then they'll continue to hold, but they won't necessarily buy more. They won't necessarily sell on a Saturday after that's all done. So most of the rebalancing is done. Any positions that needed to be closed out before the end of the week would be closed out on Friday. Before the end of the month would again be closed out on Friday. And it's unlikely people will open new positions on the last day of the month, which is on a Saturday. So Saturdays are always pretty quiet, but you can expect this one to be extra quiet. Unless we basically collapse. Because there is a real, what would you call it? The market doesn't need that much selling to go down, especially when it's already bearish. Now, this is because we're already here. Like, we've already had a bearish retracement, a false breakout, sell-off back into the range. When the market has that, it doesn't actually need much to continue in the direction that it had been moving, which was down. Right? We moved down. But holding the lows, and I'm saying that could happen. I don't think it will. I think that holding the lows on Friday evening was more than strong enough to keep us where we are. So I would expect that today we don't see a whole lot of really anything. I would guess that today we see sort of just some kind of sideways until midnight. Now tomorrow gets very interesting as we see these different paths. How have these looked? Green path is still valid. Price has to go up there to break out first. Black path so far has been avoided. That's really good. And so looking like we could follow something like the blue path. Now we went down and took out the lows, but that's fine. And I think that we can go down again and retest at these lows. But I would expect as long as this 58.3, this pivot area is holding, that we're all good in terms of Bitcoin. Now, when we say we're all good, it doesn't look good. It's not got much impulse, not got much, real demand there underlying it. But the market does continually fail to sell off below this 57, 58 area. So until that breaks, you should expect it to be one of these, could be one of these summer low volatility shitty phases where everyone just loses interest and the market seems like it's dead, and then we go higher. I don't know. Apparently someone has shared a screenshot, and Adam texted me this morning, Professor Adam from Investing Campus, saying that apparently I'm telling everyone in my campus to short Bitcoin because it's going to 30k. And which is news to me. It's news to me because I don't even have any trades open. I'm just sitting in cash. I don't have any long trades. I don't have any short trades. But apparently I'm telling everyone to short. So just to be clear, I'm not telling everybody to short. There definitely are places I would short from, but it would actually be from lower. First thing would be losing 58. Then I would consider potentially some shorts. But you'd want to need to see some sustained weakness. As for right now, I don't see really sustained weakness in BTC from the last 2 or 3 weeks. I just see it as really being kind of choppy. Now, that failed breakout at the highs can absolutely lead to a move lower. And the longer it goes on like this, I do think that a further flush and reset of positioning can happen. First place I'd be looking, though, would be just back to retest the level we've had. Whenever price rallies and whenever price bounces from a level, it tends to come back for a retest. This is the tendency, this is the nature of how markets move. A lot of people want to compare this, which is kind of funny. A lot of people want to compare this summer to last summer. right? Which I don't think is a good idea, because I don't think you should take the most recent instance and say, oh, look, I saw someone posting earlier saying, oh, everyone, it was on Twitter, like everyone's preparing for red September. They say we're always bearish in September, but last September we were green. I was like, great. The reason why, not that either is necessarily right, because I don't think we have enough past data for Bitcoin for it to really be significant. But the people saying that Bitcoin tends to be red in September, by the actual data, they're correct. There are more red Septembers than green. On average, and the median, they tend to be red. So just because last September was 3.9% positive, it's not like, oh, let's fucking get max long for September. So just, Anyway, if anything, the similarities of what we did have last summer and this summer was an August washout. So on the 17th of August, we had a massive leverage liquidation and positioning reset. And on the 5th of August this year, we had a massive leverage liquidation and positioning reset. Now, the weird thing is, I see people drawing stuff like this and saying, I've seen this on Twitter a few times, go to a chart that's clean. I've seen a bunch of, charts looking something like this, where like, oh, this is just like last summer, and of course that's not a clean chart. This is just like last summer, and we just have to get through here, and we'll do this, and we'll do that, and then away it goes. Like comparing it to like this part over here. We're going to make higher highs, higher lows. But if you're actually comparing it, again, I don't think it's a great way to trade, is to just blindly fucking compare these things. If you're going to compare it, we had a positioning reset, and then we retested that low. We've had a positioning reset, we have not retested that low. So if you're actually going to do the same thing, it should be that. And then we start to build up. Right? There should be some kind of retest of that level. And that's not because it happened last summer. You've seen my lesson that I post every time we have a crash. Retest, retest, retest. It's a daily lesson if you want to go listen to it. It's in the daily lessons. Go search daily lessons, type in retest, you'll hear it. When the market moves to an area and then moves away from it, it tends to come back to test, is there real demand here? Obviously the first time it got flushed out was leverage getting liquidated and people getting stopped out. Then it moves up, so it tries to go higher, and it's failed to go higher that second time, and it's fallen back into range. So absolutely, I can see very clearly how if we lose 58, we can move down back to the lows for a retest. But the first expectation should be that retest would hold. That would be your expectation initially. At least to begin with, because there's very strong reaction from there, you would expect at least as strong a reaction on the low time frame, which means the automatic rally, the bounce straight off 50 went right up to 62. Right, so that was our immediate demand. That would happen in the space of 3 days. If we come back to 50, I would expect to hold and at least go to maybe 58. It doesn't have to go to there. Now, if it's a weak market, it will bounce less and it can go lower. So if you're looking at trading through the levels, my expectation would be if we lose 58 and we start to lose some of these levels, we can go all the way back down to 50, but I would expect 50 to hold at least first time. Whether it goes to 40 or 30, I don't know. I mean, it's pretty nailed on that if we start trading down here for any significant period of time, it's probably over, at least for quite a while, as Bitcoin would have at that point retraced the entire ETF rally, which would show that the ETF move was really just a leverage move, where most of it was driven by speculation rather than any kind of new bullish flows. And that was a rally that took us to all-time high, right? And then spot sellers stepped in and took out or stopped the market. And that we have that's it, right? The ETF overall, with even 18 billion flowing in, was not enough to keep the market going higher. And there's no other way to shake that than it's a bearish thing. And that's not a bad thing either. Like Bitcoin, which I'll probably talk more about on like monthly preview, which will drop tomorrow or Monday, looking ahead to September, is that BTC has different phases between long and short term. So long term, it's based on adoption and new flows, meaning new and bigger players. Every single person, like every single one of you, can already have your maximum allocation to Bitcoin. So can I. Obviously, we make more money comes in, but you're not ignorant of Bitcoin, right? You know Bitcoin exists. You know how to access it. It's very, very, very easy to buy Bitcoin. And that's true for pretty much everyone in the world, from a retail perspective, and for most institutions now. So the next phase of BTC, if you want to call it that, would be like central banks, or just banks in general, which there are some institutions, but especially central banks or governments and big institutions. And that's where you're starting to see countries, more than just El Salvador, and countries stepping in, central banks stepping in, because that's what gold is, right? Gold is all being driven by central banks. Like pretty much this latest wave of gold has been like China's been hoarding gold. I think Russia, Iran, they're buying up gold. That's why gold is doing what gold's doing and Bitcoin is not. I mean, it's quite clear. You've different participants, like China's not buying Bitcoin, Russia's not buying Bitcoin, at least not openly. Iran's not buying a lot of Bitcoin. America's not buying Bitcoin. But all of these players can and do buy gold, which is why you can see gold doing something different to what crypto's doing. Bitcoin is not supposed to follow gold. Again, don't confuse correlation and causation. Gold going up does not make Bitcoin go up. Gold going up can often be in the presence of the same causal factors as Bitcoin. Meaning, if there is especially a currency debasement trade happening, where you see a rise in global liquidity, like we saw from October, right? So like we saw from October to March, this part here, where Bitcoin and gold were both rising, but so were stocks. That was because liquidity was rising. Obviously, Bitcoin had the ETF narrative, but there was rising liquidity, there were improving conditions, there was an expectation of more printing to come, or looking ahead at rate cuts and all of that, and positive, Q4 and Q1, which tend to be the best quarters for Bitcoin and risk assets. It all came together for basically an everything rally. Gold went up, Bitcoin went up, stocks went up. That does not mean that because gold has continued to go higher since then, does not mean that Bitcoin has to also continue going up, because the conditions are not the same. Things have changed. So if there was some kind of causal factor, a causal factor would mean that somehow, because gold is being bought, it also means Bitcoin is being bought. That would have to mean that some of these entities buying gold, like central banks or whoever, would also have a mandate to buy Bitcoin alongside gold. That's clearly not true. Not yet. In the future, I think it will be. But when people say Bitcoin should be like gold, that's also a logic fail. Think about it. Nobody says Bitcoin is gold. They say it's digital gold, which means it's not the same thing. It's supposed to be in future, in the digital era and the digital age going forward for the next 100 years, it's supposed to be something that is technologically superior to gold for the modern world. But that requires adoption. People have to believe that. And that's a thing. That's something that will take time. It's not going to happen overnight. And it's certainly not going to happen just because gold's at all-time highs. Doesn't mean Bitcoin has to be either. Right? It's correlation and causation. And if you're looking at what happens next, you can't look... I mean, one of the things you should learn as a trader, and it will become, eventually it will become very clear to you. So you can accept what I say right now, or you can figure it out for yourself over time. It took me quite a while to figure it out, because whenever I started trading, I would always look at certain things. And if you're looking online, there's always people always do this. They're like, oh, look, global liquidity's up. Why is Bitcoin not up? Well, it can lag. That's really simple, right? It can lag, number one. Which means it is going to follow global liquidity, just not right away. Or, why is gold up, Bitcoin's not up? Again, I've explained that. Why are stocks up and Bitcoin's not up? Why is the dollar down but Bitcoin's not up? All of these things. You have to understand that sometimes they move together, which is a correlation. Sometimes they don't, which just means that the causal factors underneath are different. Right? Bitcoin is its own thing, and it can do its own thing, and it will go in its own direction, and sometimes that direction will be the same as the stock market, sometimes that direction will be the same as gold, other times it won't be the same. That's just how markets move. The only way that Bitcoin could follow perfectly anything would be if the exact same participants were taking the exact same trades on the exact same assets at the exact same time. They were literally saying, okay, we need to buy gold and we need to buy Bitcoin because we see them as one and the same. That's why when you look at the S&P and the NASDAQ, they do have more of a causal relationship. Where if you look at the S&P, so the S&P 500 is just the 500 top companies in America, in the US stock market. And the NASDAQ is the top 100 tech stocks, which is basically the same. It's the same economy, right? It's all about US. And look how close the correlation is, to the point where a lot of this is causal, because when people go to buy the S&P 500 index, many funds and players and institutions and retail and everything, they also have a mandate to buy some NASDAQ. And sometimes that will be, we're going to buy, if we've got $1,000, we're going to buy 70% S&P, 30% NASDAQ. And occasionally, like it has been in the past year, sometimes they'll buy more NASDAQ because the NASDAQ has been outperforming. And they might buy more NASDAQ than they do S&P. The point of that, which I don't know if this is the correct, I don't know if that's the correct NASDAQ one, is it? I'll get the NASDAQ index. There it is here, yeah. That was a futures contract, I think. And so you can see how closely they follow each other. A lot of that is causal. It's a bit like Bitcoin and Ethereum, right? Some players, now maybe less so recently, but certainly in the past, a lot of players would have had a ratio, especially in a bull market, and they say, all right, if we think it's going to be risk on and the market's going to rise, let's buy 70% Bitcoin, 30% ETH. Because Bitcoin will, if Bitcoin goes up, ETH will go up too. That's been the way, that's been the logic in people's minds. And ETH is beta, so we want to have not as much ETH because it's more volatile, but we want to have exposure to ETH because ETH might go up more. Bitcoin might go up 2x, ETH might go up 3x. So let's have some ETH. That's why there's an actual causal effect. It's not just, oh my God, look at these. These two charts can't look so similar, can't follow each other so similar just by pure coincidence. People actually buy the indexes. They put, mutual funds, people investing, institutions, all of that. They will have some exposure to S&P and some exposure to NASDAQ. It's very simple. This is like the predominant way in which the vast majority of passive flows, so people who invest passively, right? The average guy just working who puts some of his wages into the stock market every week because he's read fucking, Intelligent Investor, or he believes in Warren Buffett and he's like, I'm just going to buy this stuff and hold it for 20 or 30 or 40 years and get the compounding effect, which, by the way, has worked, right? On average, over time, the S&P will go up 10% per year or 9% per year, compounded, and the NASDAQ will go up slightly more, but with more volatility on the downside. So you buy more S&P, you buy less NASDAQ, but you want exposure to both. Bitcoin doesn't have that. Other crypto coins have that to Bitcoin, right? There are times in which if Bitcoin is rising, people will say, okay, let's get some Bitcoin, but let's also spice it up with a little bit of beta. Let's buy some of the Solana. Let's buy some of the lower cap stuff because it could go up. If Bitcoin goes up 10%, an altcoin could go up 50%, and we want to have a little bit of exposure to that, right? But people don't look at that and say, I'm going to buy some gold, so I must also buy some Bitcoin, or I'm going to buy some NASDAQ. I'm going to buy the NASDAQ index, so I'm also going to buy Bitcoin. It's not like that. They have their own separate conditions. So yes, you see sometimes where they are correlated, but it's not a causal relationship. Okay? Cool. That should explain that. And I suppose there's not really much more to say because it's the Saturday, so not that much should really be happening. It is end of the month, so we're just seeing how all of these finish, right? So obviously the stocks they're finished, their monthly candles are closed because they don't trade on weekends. So here's the monthly close for the dollar. Still not breaking down yet, but certainly you would look at this and say the probabilities should be that the dollar looks more likely over the next several months to go lower than it does to go higher, but it still is holding at this kind of 101 level that it has been at for, a year and a half now. And stocks, S&P closed with a great reversal candle. NASDAQ, same thing, slightly less as the tech rally begins to lose a bit of steam. And as for crypto, as we go towards the end of the month, how's total looking? Total is closing with a wick below and a rally. Now this was closer to going green a few days ago, if you remember. Total 3, the altcoins, same thing. So this, these, assuming everything closes here in 12 hours, 13 hours, I would say that it sets up probably a choppy September. I would say it's unlikely for these to open September and go significantly, like go lower and stay lower in September itself. I also don't think that this is setting up to like moon in September. I think probably we're going to see a consolidation month where it has some downside, some upside, and then moving towards the end of the year, we see more of the directional move if it happens. So that's where we're at. I'm certainly not telling people to short Bitcoin to 30k. If I short it, I'll tell you guys when. I do think it can go lower, absolutely. But I also think that it is just within this range. And I expect September definitely to have a down wick. So I would not be entering a long right now expecting that this is the lowest price you could get. Look at all the monthly candles. Almost all of them, not everyone. They tend to have lower wicks. And I would expect that there's going to be some lower wick in September at some point. Again, it's not guaranteed, but you're playing probabilities. What's the probability that it doesn't? I think it does. And I think we can revisit the lows. So, that's where we're at. GM. Today, weekend workshop, 4 p.m. UTC. Be there. Today's weekend workshop is all about impulse candles. It's going to be a banger. And I'm going to impulse candle. Where are we? Announcements over here. Telling you all about impulse candles, how to spot them, using strong breakouts and weak. How to identify if a breakout's more likely to hold or more likely to fail, how to trade them, and how to define it yourself. Understanding what an impulse is and actually taking it and making it objective. I'll also be breaking down the trading competition. New trading competition starts at midnight tonight, 1st of September, for blue belts and above. All the details are here, but I'll break down on the stream exactly what that is for you. So be there. See you then, 4 p.m. UTC, GM. GN.